Do you find yourself wondering, what fees do I really have to pay with PayPal Working Capital? You're not alone. In the often complex world of business financing, clarity about costs is paramount. We've all seen those headlines about hidden fees, skyrocketing interest rates, and repayment terms that feel like they're designed to trap you. It's enough to make any business owner hesitant. Before we dive deep, let's set the stage. PayPal Working Capital isn't your traditional bank loan. It's a cash advance designed for businesses that process payments through PayPal. Think of it as a bridge to your short-term financial needs, leveraging your existing sales history with PayPal to provide quick access to funds. This unique structure inherently influences its fee model, making it quite different from what you might expect from a conventional loan. This fixed fee is determined at the time of your application and is based on a few key factors. Firstly, the amount of capital you're borrowing. Naturally, a larger advance amount will typically incur a higher fixed fee. However, the relationship isn't always linear, as other factors come into play. Secondly, and very importantly, your PayPal sales history. Since PayPal Working Capital is based on your business's activity through the platform, your past sale performance is a crucial determinant of the fee. Businesses with a strong and consistent sales history through PayPal are often offered more favorable terms and lower fixed fees. This makes sense. PayPal is essentially assessing the reliability of your future cash flow through their platform. And finally, the repayment percentage you choose. This is a truly unique aspect of PayPal Working Capital. When you're approved, you get to select a percentage of your future PayPal sales that will automatically go towards repaying your advance and its fixed fee. The higher percentage you choose to dedicate from each sale, the faster you'll repay the advance. And here's the key, the lower the fixed fee will be. This incentivizes faster repayment and gives you a degree of control over the total cost. Let's illustrate this with a hypothetical example. Imagine PayPal offers you a $10,000 working capital advance. They might present you with a few repayment percentage options, say 10%, 15%, or 20% of your daily PayPal sales. If you choose a 10% repayment rate, your fixed fee might be, for instance, $800. This means you'll repay $10,800 in total. If you opt for a 15% repayment rate, your fixed fee could drop to $700, making your total repayment $10,700. And if you select a 20% repayment rate, your fixed fee might be even lower, perhaps $600, leading to a total repayment of $10,600. As you can see, the higher the percentage of your future sales you commit to repayment, the less you pay in total. This flexibility allows you to balance the speed of repayment with the overall cost, tailoring it to your business's anticipated cash flow. It's important to clarify that this fixed fee is not an interest rate. You won't find an APR listed, which can sometimes make direct comparisons with traditional loans challenging. However, the advantage is the absolute clarity of your total repayment amount from day one. There are no surprises down the line. You borrow X, and you pay back X plus the fixed fee. Now, let's talk about repayment itself, because this is where the fee structure becomes truly integrated with your business operations. The repayments for PayPal Working Capital are automatically deducted as a percentage of each PayPal sale you make. This means that when your sales are booming, you repay more quickly. When sales are slower, your repayment amount automatically adjusts, making it more manageable. This flexibility is a significant benefit, especially for businesses with fluctuating revenue cycles. While repayments are tied to your sales, there is a minimum repayment requirement every 90 days. This ensures that you are consistently making progress towards repaying your advance, even during prolonged periods of low or no sales. This minimum payment typically ranges from 5% to 10% of your total loan amount, loan plus fixed fee, depending on the estimated repayment term based on your business's past PayPal sales. For advances estimated to be repaid within 12 months, the minimum is usually 10%, while those estimated to take 12 months or more might have a 5% minimum. A common question that arises is, are there any hidden fees? The answer, unequivocally, is no. PayPal explicitly states that there are no periodic interest charges, no monthly bills, no late fees, no prepayment fees, no penalty fees, and no other hidden fees whatsoever. The single fixed fee is the only cost you will incur beyond the principal amount of the advance itself. This transparency is one of the most compelling aspects of PayPal Working Capital. You know exactly what you're signing up for. Furthermore, there are no additional charges if your PayPal sales fluctuate or if you have days without sales. The automatic deduction model naturally accommodates these variations. If you make no sales on a given day, no repayment is taken that day. This contrasts sharply with traditional loans that require fixed, scheduled payments regardless of your business's performance. What about early repayment? Can you save money by paying back your advance faster? With PayPal Working Capital, you can absolutely make additional payments or even pay off the entire advance in full at any time, with no early repayment fees or penalties. However, because the fee is fixed up front, you won't necessarily save money on the total cost by repaying early. The fixed fee remains the same regardless of how quickly you repay. This differs from interest-bearing loans, where paying early reduces the total interest accrued. For PayPal Working Capital, the benefit of early repayment lies in freeing up your capital and eligibility for future working capital advances sooner. Many businesses appreciate this flexibility, as it allows them to clear their obligations and potentially access more funding for new opportunities. To be eligible for PayPal Working Capital, your business typically needs to have a PayPal Business or Premier account for at least 90 days. Process a certain volume of sales through your PayPal account in the last 12 months, e.g., at least $15,000 for business accounts or $20,000 for Premier accounts. No outstanding PayPal Working Capital advances. The application process itself is usually very quick and straightforward, often taking only minutes. And if approved, the funds can be deposited into your PayPal business account almost instantly. This speed is another significant benefit, especially when you need capital quickly to seize an opportunity or cover an unexpected expense. In summary, the fees associated with PayPal Working Capital boil down to one thing: a single fixed fee. This fee is determined by the amount you borrow, your PayPal sales history, and the repayment percentage you choose. There are no hidden fees, no interest, no late payment penalties, and no early repayment fees. Repayment is automatic, adjusting with your PayPal sales volume, with a minimum required every 90 days to keep things on track. With that said, thanks for watching, and until next time.